The first thing which I need to check with you, Mr. Gupta, is despite a 22% YOY increase in revenues, EBITDA margins declined nearly 362 basis points sequentially. Could you, give us the reason for the decline?
So basically, if you really see, EBITDA is something in this industry is going to keep on varying. And the reason for EBITDA margin change is, sometimes your interest income, if the interest income, there is a change in interest income, both at revenue side and at bottom line side, expense side. So if change from a top line side, the margins will start getting change. But one unique feature had happened this year with us over here. If you really see, we are talking about exceptional items. And because of that, few of our, ratios again have distorted because these exceptional items are also hitting our pre-exceptional item EBITDA margin and post-exceptional item EBITDA margin. And that's where I personally feel the second impact, which is coming in our result.
Right, okay. Mr. Gupta, hi, this is Snehi joining in. Let's talk about your MTF assets. They grew 55% on a year-on-year basis compared to the 52% growth that we've seen in the MTF interest income. Now, as the company raises additional debt capital, should we expect incremental MTF spreads to remain stable? Would they compress or would they improve going ahead? And what minimum post-tax return on equity threshold are you penciling in before allocating additional capital to the MTF segment?
So basically, the whole fundraising was for our working capital requirement. And we have utilized and we are constantly and judicially, increasing and utilizing those funds for our working capital. MTF is one of them. If you really see, we are constantly expanding and increasing based on the funds available with the company. In between, because of various regulatory changes, there are requirement of funds for which the limits were available from banking channel have been stopped, and we have to utilize those funds for our working capital limit, and as a result we have to go slow on MTF book. Having said that, we are constantly looking at increasing our working capital MTF book. And for that, we are constantly increasing and are going to increase funds borrowing from market at a different time from a different instruments. And if you really see our debt equity ratio has come down drastically, and we have got enough space, to borrow the fund at a reasonably good rate and start generating, expanding our MTF book in the marketplace, which will keep on happening. So I personally believe that the constant growth which we are expecting will still go, and we will constantly work on expanding our MTF book. So far, yield is concerned, we have been able to generate about 14.5% kind of a yield, between 14.5 to 15% kind of a yield from easily from our working capital or MTF book side.
Understood. And let's also talk about the distribution AUM that has increased 26% on a year-on-year basis. But on the flip side, distribution income has declined 22% sequentially. Could you explain this divergence that we're seeing between asset growth and revenue growth? And could you break up the increase in AUM between net flows and market appreciation?
So basically, I mean, if you really see, we are tracking our AUM, constant expansion of AUM. Having said that, obviously there is a market impact as well as, constant inflow. If you really see and look at our communication in March quarter, there was hardly any market appreciation happen. But roughly, I would say from March till this quarter, there are appreciation of between 7 to 10% in terms of market appreciation side. But by and large, constant inflow is happening, and we are constantly adding funds in our mutual fund book and AIF book as well as PMS book, and expanding our book over there. So, I mean, we believe that the constant efforts are happening. In terms of looking at total overall revenue from last quarter to this quarter, that revenue is subdued because of a simple reason. In March quarter, we have been able to do extraordinary revenue from insurance business because of January, February, March impact, and insurance business largely happen in that period. This month, this quarter, comparison to last quarter, that revenue, that income has little bit subdued, and that's the reason if you really compare from March quarter to this quarter, there is a little subdued revenue being generated. But if you really compare from year-on-year basis, we have grown over there also.
Okay, and lastly, Mr. Gupta, you had guided FY26 exiting at 51% to 49% for your broking to non-broking business, and you've targeted continued divergence. Where does Q1 FY27's mix stand, and is broking's 15.4% year-on-year growth this quarter ahead of or behind your 15% full year guidance?
Really see this quarter, the company has done really good in terms of revenue. If you really see 22% growth is there. If you really bifurcate, broking and related services have grown by about 15%. MTF and distribution and other book has grown, which is non-broking side, has grown by about 40%. And if you really see, we have been constantly working and we have been given and set our targets that our broking book should normally expand between 14% to 16% kind of growth on year-on-year basis, and non-broking we will try and aspire to grow between 35 to 40%. And we believe that we will be able to achieve that guidelines. And having said that, the overall mix, which was about 60-40, we will in over a period of 2 years, we will bring it to about 50% broking versus non-broking book over a period of time. So I think we are well set, and if you really look at the present growth, is also indicating the same way.
Okay, understood. So, Mr. Gupta, on that note, thank you so much for your time. Thanks for sharing your outlook with us. So, viewers, that was the management of Anand Rathi Share and Stock Brokers. And that's the outlook for the full year going ahead as well on the back of their Q1 earnings. On that note, time to slip into a very short break. On the other side of the break, we'll keep the earnings conversation continued. And we have the management of SG Finserv joining us on board. Stay tuned and we'll be right back.